Welcome back. Well, lots of stocks to track this morning as well. Overall, the context seems fairly sanguine with the recovery across Asia. So let's boil this down to a lot of the movers and shakers, including several earnings that have come through. Our team is standing by, as always, with the CNBC-TV18 list of top stocks to track. Guys, good morning. Sonal, let's start with the big headline. Relief for real estate?
Oh yes, after a lot of discussions, this has finally come about. To give you the context, this time around an amendment has been moved by the Finance Ministry where they have said that properties which are bought before 23rd July in 2024, they will have an option of taxes on property sales. They'll get two options. First is they'll pay 12.5% tax, but that will be without indexation. That was the new amendment that was introduced. The second one will be they'll pay 20% taxes, but that will be with indexation. So whichever is more beneficial for any property seller, they can choose that. However, if you have bought a property after 23rd July 2024, you will have to pay taxes at 12.5%, and that will be without indexation. Now remember, there were a lot of discussions because the new amendment would have been positive only if the pricing growth was more than 10 to 11%. That was not the case. So finally, the government has offered some relief, and that could be positive for some of these real estate players. They've fallen sharply since the budget announcement.
All right, Sonal, thanks a lot for that analysis on that big CNBC TV18 exclusive. Well, let's hop across to Ekta. She's here to tell us about Lupin. Ekta?
Very good numbers. Revenue up 16%. We had margins which came in at a multi-quarter high at around 22%. Profit, which was at 800 odd crores as well. US sales came in better than expectations, $227 million versus $209 million Q1Q and versus estimates of $220 million. India up 17.5% year on year. Company says they're on track for a sustainable strong growth and improved margins. Expect the stock to be in the green today.
All right, I mean, that's a 20% operating profit beat from a pharma name. But of course, stock's also done very well. Remember that over the last one and a half months. Ekta, thanks for that. Coming back to you for more. Tata Power also reported numbers. Vivek has got details. Vivek, good morning.
Well, good morning. With its many moving parts, Tata Power this time has managed to go ahead and beat the consensus estimates in terms of the operational performance. Revenues higher by almost 14%, aided by the Mundra going ahead and operating under the Section 11. So almost 14% higher for the revenues. EBITDA higher by 21.9%, coming in close to the 3,587 crore mark. Margins too coming in strong at 20.7%. Profitability, however, flat on a year-on-year basis. Profitability was impacted by lower other income, higher interest that the company was paying, lower JV profits, as well as higher minority. Now, talking about what exactly worked for the company this quarter, lower coal prices aided Mundra performance, but on the other hand, the renewable energy IPPs, or the independent power producers, that actually saw PAT decline. Capex this time very strong. Last time they had given a soft commitment of close to 18,000 crore for this particular year. They've upped it to 20,000 crore, so that's a positive. Renewable will see the bulk of the Capex spends. Almost 12,000 crore renewable will be seeing. Capacity addition targets, the company has given FY25 capacity addition target of close to 3 gigawatt, FY26 total capacity addition of close to 4 gigawatt. The company currently has capacity of close to 15 gigawatt. Also, one inorganic acquisition that the company has made as far as the transmission space is concerned. Expect the stock to open in the green today.
Okay, all right. Got that. Thanks very much, Vivek. Back to Ekta. Ekta, tell us about Fortis Healthcare as well. And I think Gland wasn't such a great number, right?
Absolutely. Well, I'll start with Fortis. Revenue was up around 12%. Margins improved to 18.4%. Hospital revenue did well. Occupancy came in at 67%. It was an improvement year-on-year Q1Q. Average revenue per occupied bed also was higher on a year-on-year as well as Q1Q basis. Diagnostics was weak. It was up only around 2%. Margins 18% versus 22%. Company says was impacted due to rebranding exercises. We also had Ravi Rajgopal, who has stepped down from as chairman. Remember, he had taken over at the time when Fortis was transitioning post that entire deal. So that's an important point to note. For Gland, I expect that stock to be in the red today. Very disappointing numbers. Revenue was up only around 16%. Street was anticipating an over 20% growth. Margins 18.9%. Street was anticipating 24%. So multi-quarter low for margins. Profit also 143.7 crores. The reported margins were impacted by the acquisition of Cenexi. It's the lowest since Q4 of FY23 when it was 21%. Cenexi reported an EBITDA loss of 28.6 crores. US was up 27% year-on-year, but it declined Q1Q, and India was down 19% on a year-on-year basis. Management seems confident going forward, but in the near term, Q2 numbers will be impacted because of a plant shutdown. But nonetheless, even though their confidence is there, the proof of the pudding will really be in the eating in the coming quarters.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Vamakshi. She's here to tell us about Cummins. Morning, Vamakshi.
Well, good morning, Nigel. It's a mixed set coming in from the company. Revenue stood at 2,304 crores. This is an uptick of nearly 4%, but it has come in 5% lower as compared to our own expectations. Domestic sales were up nearly 12%, but exports continue to remain weak, down nearly 22%. The exports have risen by almost 13% sequentially, and this indicates that the demand environment in the export market could be improving quarter on quarter. Power gen revenue was expectedly softer after transition to the new energy norms as well. EBITDA margin, however, was up nearly 486 basis points to 20.28%. This came in much higher as compared to our expectations, and this improvement could have been driven probably by higher share of the new gensets, which are priced nearly 30 to 40% higher, as well as the lower staff costs, which declined by almost 3.6%. Net profit came in at 420 odd crores. This was largely in line with what we were expecting, up nearly 33%. Additionally, there has been an announcement made by the company. Mr. Ashwath Ram has tendered his resignation. He will be pursuing a full-time role at Cummins USA. They've appointed Ms. Shweta Arya as additional director and the MD designate in his place. The con call is expected to be held today for the company at 11:30. It is important to understand the outlook on demand, pricing for the new gensets, as well as the export environment for the company. But given, I expect the stock to open in the green, given that over the past couple of days, the stock had corrected in reaction to the global parents commentary.
Okay, all right. Thank you very much for that. Vamakshi, for that. PI Industries is the next one we're going to focus on. I think there's a margin-led improvement here. Sonal has got details. Sonal, morning.
Well, yes, it's a beat again for PI Industries, a margin-led beat where margins came in at 28% versus a poll of 24.2%. The company has maintained its 15% revenue growth and profitability targets as well. If you look at the numbers, revenues were up 8%, EBITDA was up 24%, margins, they were higher by 300 basis points to come in at 28%, and profits were up 17% as well. A lot of reasons for margins to go higher and largely led by newer products as well. The company says they saw 14% increase in their export market that continues to do well. The domestic market did see some impact because of seasonal rains and also because of delayed sowing. However, that is expected to improve July onwards. The biologicals revenue, they increased by 39% on a YOY basis, and new products also saw a growth of 24% on a YOY basis. Going forward also, they're optimistic. So the stock could be in the green today.
All right, so good numbers from PI Industries. Got that, Sonal. Thanks very much. Let's go across to Mangalam. Bata missing a step, Mangalam?
Bata missing a step indeed. You know, I tell you what, no two ways about the fact that these results were weak. There was weak consumer sentiment, heat wave elections further accentuated that weakness. But add to that, there were higher employee costs and a one-off tech investment that the company did that impacted EBITDA as well. But you would see the net profit higher by almost 63%, and that's because of an exceptional gain on sale of land. So to sum the numbers up, the revenues were down by about 1.5% year-on-year. Gross margins were maintained. That was a mild positive. EBITDA was down 23%, led by higher employee expenses and the one-time tech investment that the company made. And the net profit at 174 crores, of which 134 crores was, the gain on sale of freehold land. Will be very interesting to see if the street now decides to look ahead, cut out all the exceptionals and at the same time anticipate festive season-driven consumption uptake. So the stock opens in the red. From there, do we see buying at lower levels is something that I'll be tracking closely.
Okay, all right. Thanks very much for that, Mangalam. Well, Gujarat Gas is the other one we want to focus on. Back to Sonal. Sonal.
Well, it was a mixed set. While margins were a miss, it was better volumes for the company this time. So margins came in at 12% versus a poll of 13%, while volumes, they came in at 10.98 MMSCMD versus an estimate of 10.2 MMSCMD. Overall, revenues were up 7.6%, EBITDA was down 9.3%, operating profit margins down 230 basis points, and profits were down 19% as well. Now, we are going with red on this one because remember, the other two companies, that is MGL and IGL, they reported a margin expansion despite price cuts. So for MGL, the margin expansion came in to 110 basis points. For IGL, margin expansion came in at around 200 basis points. Both these companies had also cut prices, but they went ahead with margin expansion. So this is where Gujarat Gas saw a miss. So going with red on this stock today.
Thanks a lot for that, Sonal. Well, let's wind this down with Yash, who's here to tell us about PB Fintech. Morning, Yash.
Morning, Nigel. So, of course, a very strong quarter for PB Fintech as far as the first quarter of the year and the start of the year is concerned. Revenue, which is of total business, the core business as well as new initiatives, that grew by 52% to come in at about 1,010 crore rupees. Contribution was up 29%. Contribution margin, that saw a little blip down by about 500 basis points. That came in at about 28% versus 33%. Adjusted EBITDA was very strong, saw a growth of 113% in adjusted EBITDA margin. They also expanded by about 200 basis points at 5% versus 3% on a year-on-year basis. Now, importantly, your Q1 FY25 renewal or trail revenue ARR came in at about 559 crore rupees versus 418 crore rupees. If I had to sum it up the numbers in three important sentences, then it was a strong premium growth, strong revenue growth in both new business as well as core business, with a growth of 112% in premium and 132% in revenue. Now the new initiatives book is almost half of the core book. So that's important. And on one hand, the profitability, the operational performance improved in the positive territory for the core business, and operational losses were cut down on the new initiatives business side.
All right, got that. Thank you very much for that update as well, Yash.